Hello, my fellow friends and customers, homeowners. Oh boy, okay, let's see what we have today for you guys. I have several things, but I only have 15 minutes per every video. So I really want to go into the flaws that HAMP has, because I know that a lot of you've been struggling with your lender or your servicer to get a home affordable loan modification under HAMP, and the fact that a measly 5% of eligible homeowners, 170,000 to be exact, have actually entered into a long-term modification plan with their lender investor. Now, that doesn't come as a surprise for anybody, but it is likely that your effort has gone on for months and months, or worse, you've been denied one or more times just to be told to reapply. Now, why is this, you ask? Well, as it turns out, it's been reported that there are actually seven major flaws with the home affordable modification plan. Now, that puts its success in jeopardy, and it acts as incentives to lenders and servicers. Some of the flaws that can be dealt with, but several cannot. So, why servicers won't modify your mortgage? Well, the first six of the seven flaws act as disincentives for lenders and servicers, and are the primary reason that they drag their feet or deny you on the application. Now, number one is there is no financial incentive for a servicer to modify a mortgage in many cases. Okay, what most people don't understand is that once you stop making your mortgage payments, your lender, your investor's motivation quickly shifts from trying to make a profit to minimizing their losses. So, even though HAMP offers financial incentives for them to modify your mortgage, they'll often lose less on your property if they foreclose. Now, they would be modifying it and accepting the incentive, so they make more money. Actually, they lose less money. It's not about making, is they lose less money by foreclosing on you than modifying and accepting the incentive. Okay, the incentive doesn't do anything except for maybe paying for the people that have been dealing with you on the back end. So there is it's not the banks or the investors or the servicers necessarily. They don't make money on a foreclosure, although they do in some cases. They just lose less than if they modify you. Now, number two is that banks and servicers don't have to explain why they deny a package. Okay, if they do give you a reason, because HAMP tells them that they have to give you a reason, they don't explain it how they determine you didn't qualify. Most likely it's because they don't even know. So there's nothing in HAMP that would motivate a lender to take the time and energy to explain what happened and why. There's number three is there's little to no enforcement from the Treasury Department, and the lenders know it. So while the procedures are well established, it's very easy for the lenders to skate the system as feign compliance when they really have no intent to modify loans. Now, most servicers and lenders aren't set up to handle foreclosure situations. This is number four. They were organized to handle setting up loans and handling payments, not foreclosure counseling or the intensive mortgage modification process. Most servicers have made big strides in hiring people and improving their responses, but they also have a long way to go, and there's no way to know how many of those new hires are actually working modifications as opposed to processing foreclosures. More than likely, servicers are hiring people to do both, since the modification process doesn't stop the foreclosure process. Now, Unfortunately, if you go online, let's say your servicer is Linton Loan Servicing, you go online. First of all, Linton Loan Servicing does not have a mortgage license; they have a collection license. Okay. Second of all, if you go into their employee tab, in order to get hired to work in the loss mitigation department, the only thing that you really need is a high school degree or its equivalent. Oh, and maybe some computer knowledge, because that is helpful. But other than that, you don't need anything else. And then you go in, they train you, but you're never gonna get trained enough to understand how to work in modification, or loss mitigation transaction. You need years of experience in the mortgage industry in order to actually make the numbers work. You have to know if somebody is coming from a loan that was a no income, no assets, okay, and somehow they were able to qualify for that loan back in 2006 or in 2005, okay, and now you see these people, and some of them don't even have tax returns. Some of them haven't done tax returns for years, because the lender at that time qualified them based only on a great credit score, okay, and now they have to qualify based on their income. So if a lot of these people did not do their taxes because they were making money under the table, which is the reason why all these programs came out and why all these mortgage brokers made so much money, is because unfortunately the banks made room for this to happen. So people that were literally on no income, they probably were, there were a lot of people that were on welfare, okay, and still were able to get a loan on a no income, no assets, okay. There were just so many programs. It's just unbelievable. So if by trying to train somebody to help you, the homeowner, when they call you, when you call on the phone, okay, you have somebody who's making $10 an hour and knows jiggly jack about how a mortgage process works, let alone loss mitigation. So the only thing that they need to do is all they're trained to do is put information into a computer and a program. And now, mind you, even though HAMP has their own program under the Treasury Department for MHA, still Freddie Mac, Fannie Mae, and FHA, they still have their own processing system. Okay, they always had their own processing system. They have the loan prospect, they have desktop underwriting, they have LPDO, they have all these programs, and now within the program they've implemented also the loss mitigation side. Now it can be just a click of the wrong tab. You see the top part is like, if you're looking at your Internet Explorer tabs, how you have several tabs. Well, imagine two tabs, one that says HAMP and one that says non-HAMP. Okay, most servicers, okay, they go in there and they enter information for a HAMP, for a non-HAMP approval, and they enter it under HAMP. And mind you, under HAMP you use gross income and you go off the income, okay, and that's for a HAMP, and for a non-HAMP you go off the net and the actual expenses. So, and at the end they give you, it's, as long as you still, after the whole modification, you still have $200 left at the end of the month, then you qualify for a non-HAMP. And on a HAMP, they have to bring you down to 31%, and maybe defer some principal in order to get you to 31%. But if deferring that principal is going to put still the servicer or the investor at loss, Fannie Mae has guidelines that says stop, don't do it, deny them, and regardless of anything, you won't get neither an external or an internal modification. So you don't know all these things. So that brings me to point number 5. In many cases, especially in the hardest hit markets, if a servicer were to reduce your monthly payment to the point it met the 31% debt to income ratio, they will have to reduce the principal balance in order for your payments to ever pay the loan off. Now, they're just not willing to do this because they'll lose less by foreclosing in many cases. That's why you go back to the first point that we spoke about. Now, number 6, servicers are unsure of what Congress and the president are going to do. So with so many changes in the past and talk of more changes coming, lenders don't know what to expect, so they're waiting for the other shoe to drop. Uncertainty doesn't go over well with Wall Street, or bankers, so they prefer to wait and see how things pan out before they do too much changing. Now, the Achilles heel for HAMP is there are several structural problems with HAMP that either cause or intensify the 6 points we just spoke about. But there's one final reason the program is busted, just broken. It was designed to solve a different problem than what the lenders are experiencing today. Now, HAMP was designed to help homeowners whose payments were adjusting because of unaffordable mortgage loans. Now, it assumed your income would be stable, but the reason for a growing number of defaults in recent days has been unemployment rather than recasting loans. So, if you have unstable or no income, the servicers have no way to figure out a modification. So then what happens? They come up with a new program for unemployed people, unemployed borrowers, and they put you on a forbearance that never ends. Okay, and if it does, because you were unemployed, then you don't have the history of employment in order to qualify for HAMP. So unless if you have one of those deals that were 228, 2 years fixed, and then it adjusted, or if you have a 327 or an interest only, make sure that interest only payment is high enough to that you cannot make the payment, and so that way when it brings it lower with principal and interest, it's actually lower than your interest only payment. If you have those type of any one of those loans, then you will immediately qualify for HAMP. But if you have a fixed rate of 6.56%, and it's a regular 30-year deal, and for some reason you have fallen behind in your payments because you lost your job, or you had some other type of hardship, then you may not qualify for HAMP. There's a very good chance that you will not qualify for HAMP. So your best option in a case like that is either short sell your house or deed in lieu and start all over, because you're going to be in this whole modification struggle for not months but maybe years. Okay, and if you're in a payment plan or a forbearance plan with the lender, it's most likely because they don't have a program to put you in. So if you've been in that forbearance plan for over 10 months, wait till you hit the 12 months. They'll return that payment and they'll pull the rug from under you and take you to foreclosure. Okay, so while you're here thinking that they're working something with you, they're not. They're giving you that forbearance, and they're making you pay every single month under a forbearance plan, and they're just making room for either you to make a mistake, or if you don't make a mistake, they're waiting to see if the government or the investors come up with some new program to help people like yourself. So don't be blind against the reality. It is what it is. Okay, well, that's about it for the 7 fatal HAMP flaws. Be seeing you soon. I'll be talking about wonderful, wonderful things that you guys are going to want to hear about. So thank you. God bless you. Thanks for listening.